You're watching Dukascopy TV. I'm Elaine Stenson. US home building permits surged in October to the highest level in 5 years, and prices for single-family homes notched big gains in September, suggesting a run-up in mortgage interest rates has not derailed the housing recovery. Carl Kelly, US economist with FocusEconomics in Barcelona, joins me on the line now. Carl, the data released was the latest sign of strength in the economy, even though we've seen rising mortgage rates and also last month's partial government shutdown. Had this jump been predicted by economists in general, or was it unexpected?
This, as you said, it was a 5.5-year high, and that came as a surprise to many market analysts. It certainly is a positive sign, and we are seeing that there's still some high demand in the housing market, but credit is still tight and mortgage rates are high. One important thing to mention, though, here is that news on actual housing starts was delayed because of the government shutdown that happened in November. So permits have risen, but it's yet to be determined if that's going to translate into more housing starts, and we'll have to wait a little bit longer to see how that carries out.
Permits, which lead housing starts by at least a month, rose 5.2% in September and were up 13.9% from a year ago in October. The weakness in housing starts and new home sales were probably one of the reasons why the Fed did not taper in September. Carl, do you think that this housing data will raise the risk that the Fed could scale back its massive monthly bond purchases as early as December?
December, certainly not. Developments in the housing market are an important component of what the Fed considers when it makes its decisions. But our interpretation on this here is that they're kind of more focused on the unemployment rate. Ben Bernanke has repeatedly said that the unemployment rate is still a bit too high for tapering of the program to begin, and we've heard similar comments from the new nominee, Janet Yellen, who is expected to be confirmed shortly and would begin her job as the new chairman in February. It's the housing market has improved. That is true, but unemployment, while it remains above 7%, that number is going to have to come down before the Fed makes any significant decision in terms of cutting back its asset purchase program.
While building permits are not counted in GDP, they are a key indicator of economic activity. And as we've seen gains in both September and October, how confident can we be that the housing market recovery is no longer stalling?
I think we can be fairly confident of that. As I mentioned earlier, mortgage rates are still high, but the housing market has recovered significantly well after the massive recession that kicked in a few years ago. So demand for housing is still high, and so long as the economy continues to strengthen or at least maintain, and that's what we're seeing in our projections. Our sample of panelists have indicated that growth is going to hold this year and potentially even kick up into 2014 and 2015. And there's this constant feedback mechanism between the housing market and the economy as a whole. So long as the two can build off each other, there's sufficient evidence to believe that the housing market is going to hold where it is now.
Finally, you mentioned the economy as a whole there. How much of a reflection is this data of the overall growth in the US economy?
So the data, as I mentioned earlier, it's an important point, and the data on the housing market is reflected somewhat in these projections, although there are certainly other important components that are taken into account. But as I said, the projections for the end of this year for 2013 and then for the following years have really not changed a whole lot in the past couple of months. And overall the economy is expected to perform pretty well in the near term.
Carl Kelly from FocusEconomics, thank you for joining me on the line today. And that's all from me for today, but do check back for the latest updates and interviews throughout the week. Bye for now.